If you've been watching the markets lately, you've probably felt it. Everything looks fine on the surface. Stocks are strong. Big tech seems unstoppable. Everyone's celebrating the next era. But underneath all that, something else is happening. A lot of ultra-wealthy insiders, founders, top executives, major shareholders have been selling, and not in tiny amounts. We're talking about headline-making amounts. And that raises a dangerous question. Are they just taking some profits? Or do they see something coming that the rest of us don't? Now, before we go full conspiracy mode, let's get one thing straight. Billionaires sell stock for all sorts of reasons. They have taxes to pay, they need to diversify their wealth, they make huge donations, and they fund other projects. Sometimes, they even have pre-planned selling programs that are set up months or years in advance. But when you see these huge sales all clustering together at the same time, the market feels a little too confident. It's worth asking, what is the smart money doing, and why? Let's break this down in a way that's real, safe, and actually useful. First, understand this. Most billionaire stock selling isn't a panic sell. It's often done through pre-scheduled plans filed with regulators. This allows them to sell shares without being accused of trading on private, insider information. So, a big sale doesn't automatically mean crash incoming, but it can reveal something else, something much more important. Billionaires are optimizing for survival and flexibility, not for vibes, not for hope, not for hype. They're playing a different game. Here's what we can prove is happening. One of the clearest examples is how major founders continue to sell shares through these planned programs. For instance, public filings showed a plan for Jeff Bezos to sell up to 25 million Amazon shares through May 2026, and we've seen multiple large sales happen under that plan. This doesn't mean Amazon is doomed, it means something much simpler. When almost all of your wealth is trapped in one company, the smartest possible move is to convert some of that paper wealth into real, usable liquidity. Because liquidity is power, and the wealthy love power more than they love headlines. Now let's look at what happened during the AI boom. When a company becomes the symbol of the future, its stock can skyrocket. And what do insiders do? They take advantage of those high prices. One report noted that Nvidia insiders sold more than $1 billion worth of stock over about a year, with a big chunk of that selling happening during a massive run-up. Again, this is not the end. This is them saying, let's lock in these incredible profits while the market is excited. It's a textbook move. And here's a key line that every single investor should memorize. Insiders sell for many reasons, but they buy for only one reason. Selling can be personal. It can be for taxes, diversification, or 100 other things. But buying, especially big buys, is almost always a vote of confidence. So if the big story is they're selling, the real question becomes, are they also buying anything? And this is where the plot gets really interesting. Because alongside all this selling, we're also seeing signs of defensive positioning. The kind of positioning that screams, we want options. One of the biggest signals comes from the most famous slow money machine on earth, Berkshire Hathaway. By early 2025, Berkshire's cash pile had reportedly surged to a record level hundreds of billions of dollars. Why? Because it was struggling to find deals worth buying at current prices. Now, think about what that implies. If one of the world's most disciplined, value-focused buyers is sitting on a record mountain of cash, it's not because they're afraid of the future, it's because they think prices are too high for the risk involved. That's not a doomsday prediction. That's valuation discipline. And valuation discipline is extremely rare in a raging bull market, so what might the ultra-rich be quietly preparing for? Not a crash tomorrow, but a world where things get a little more complicated. A world where interest rates stay higher for longer, where debt pressures start to build, where geopolitical shocks hit supply chains. A world where markets that look strong today suddenly become fragile, because everyone's expectations are just too perfect. In that kind of world, cash isn't dead money. Cash is ammunition. It lets you buy assets when other people are forced to sell them, and fortunes are made during forced selling. Now let's talk about a second layer that most people miss. Sometimes selling isn't just about taking profit, sometimes it's about reshaping your risk. When markets feel expensive, wealthy investors often rotate away from the noisiest, most hyped up trades and move toward assets that don't depend on constant optimism to do well. That could mean short-term, safe yield investments when interest rates are high. It could mean hard assets like land and infrastructure, or it could mean simply staying liquid and waiting for better prices to appear. This is why the phrase capital flight can be misleading. It's not always about money leaving the market entirely. Sometimes, it's just moving to a different neighborhood, a safer one. We see clues of this when money drifts towards safer vehicles like money market funds, where investors can get a decent yield without the day-to-day volatility of the stock market. So, is this the great billionaires? Here's the safest, most honest conclusion. What we're seeing looks less like panic, and more like professional risk management on a massive scale. The wealthy are not predicting a single event. They are positioning themselves for many possible futures. That's what smart money does. And it's not just happening in the US. In other markets around the world, studies have shown periods where insider selling heavily outweighs insider buying during volatile times. It's a classic sign of caution. Now, for the most important part, what should you do with this information? First, don't copy billionaires' trade for your life is not their life. Your financial goals are different, but you can copy their mindset. Don't confuse a good market with a safe market. Don't assume that up means stable. Don't ignore valuation and the importance of liquidity. And most critically, never put yourself in a position where you might be forced to sell at the worst possible time. Because that is the real difference between the rich and the broke. The rich don't always win because they're smarter. They win because they're prepared. So if you're watching billionaires cash out, don't panic. Instead, ask a better question. What would I do if a great opportunity appeared tomorrow? Would I have the flexibility to act? Would I have the liquidity? Or would I be trapped? That's the real lesson behind the sell. And if you want to know the next chapter of this story, it's this. If the ultra-rich are selling some of their stocks, where is all that money going next? Because the richest people in the world never stop investing. They just change the battlefield. Thanks for watching. Make sure to subscribe for more insights on how smart money moves. See you next time.